We are live. Content provides the events for general information only, not intended to provide specific advice or recommendations for any individual. Any performance reference is historical and no guarantee of future results. All indices unmanaged may not be invested into directly. Any economic forecast set forth during the event may not develop as predicted. There can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial and do not represent the views of LPL Financial. Securities are offered through LPL Financial, member of FINRA and SIPC. And investment advice is offered through Gimbal Financial, registered investment advisor and separate entity from LPL Financial. Good morning.
Good morning, Amanda.
How are you?
I'm well. Who's that guy over on our screen there with the glasses? There's two glasses, guys.
I don't know. Don't know. Well, you both are wearing checkered. I don't know the one with the writing. I've lost all knowledge of what he looks like in the flesh.
I can tell you this. My mama hasn't forgotten about me. Look at this. My mom just dropped by.
Michelle.
Look at that. With my friend from my friend Drew's Bakery. Go say hi to Drew over at Taylor's Bakery. And it's even got chocolate icing on it. I mean, life is not like bad. You got a mom who loves you.
Oh, Shelly. Shout out to Shelly.
There you go.
What a mom.
Should we get her live on here sometime to talk about
financial? I don't know about that. I don't know about that one. Well, let's think about it. Let's have a donut.
She's gonna love this. She might be reaching out to you. I think she watches.
I think we need to add a guest list and bring some interesting guests onto the show. I've got some people in mind, and I think they would be really interesting.
Yeah, that could be fun.
I'm sure everyone would be happy to see more people than just us.
Yeah.
Well, speaking of guests, I mean, I did hear of a inspiring financial advisor story this week. I enjoy baseball, but the interest really picks up around playoff time. And I was watching the St. Louis Cardinals play the other night. They were matching up against the Dodgers, Keith. And that was an incredible game all the way to the end. But Adam Wainwright, he's 40 years old. He's a star pitcher. He and his catcher have been matched up together for like 20 years. It's just an incredible success story. But Adam Wainwright, he does this daily Bible study thing.
Oh, wow.
Where he puts together this daily Bible study thing, and he writes it himself. He says it takes him an hour to an hour and a half a day to put this thing together. And he credited his financial advisor. I wrote his name down, Don Christensen. So Don, we got a shout out to Drew over at Taylor's. Don, this is a shout out to you. Nice work on investing in Adam. That's just super cool. I was inspired by that.
You think that's his real name, Christensen? Did he just is that his pseudo name?
I'm sorry. I'll just go with Don.
Okay.
He looks like a good guy. I saw his picture.
Nice. Well, Eric, what have you learned this week that you want to shout out to everybody with?
Yeah, my words of wisdom this week is, the average life expectancy is around 78 years old. And the average retirement age now is around 67. And so we work for over 50 years to maybe enjoy 11 years of retirement. And so my challenge and my thought for others to start thinking about is starting to enjoy life now and not just in those 11 years.
That's a good word. That sounds like a familiar sound coming out of the voices of Gimbal.
Yeah.
I tell you what, you start your day off with one of these chocolate donuts, and you're going to be enjoying your life, and you might be making that 70-something years old mark at the same time.
You eat those every day, Doug, and your financial plan gets easier. I'm sorry, did I say that? Is this thing recorded?
You won't hear that anywhere else, I'd imagine.
All right, Eric, we'll send you off into cyberspace, and we'll hope to see you back here next week.
All right. Thank you.
Eric.
Peace out. Maybe not. Oh, there he goes.
You know,
I've got nothing today, so hopefully you guys.
I always have stuff.
I got a mess of stuff.
I see some Cardinal fans are watching today. We send out our condolences to you. I don't know. The Dodgers aren't bad. We'll see. Oh.
Oh goodness.
Oh my. Oh my. Well, Doug, what do you want to talk about? We haven't seen you on here for a couple of weeks, so what do you have in mind? And I can throw out some ideas as well.
Well, it's, last weekend I was in Nashville, Tennessee at a conference, and this conference had over 100 different business leaders from all over the United States. And I always love hearing an entrepreneur's story, a business person's story. And I was just encouraged that there are many, many people out there wanting to make this world a better place. And they're doing it through the avenues of business. One person, he's got a few restaurants that he was talking about and how the pandemic has been a real challenge. But at the same time, it's been an opportunity to increase doing business through DoorDash and through services like that. And so there's been new opportunities outside the drive-through line or the dining in tables. And so I've just been really encouraged by what's happening out there. Last night, I was on my phone just scrolling through, and I happened to catch Elon Musk and I don't know if it's an annual shareholder meeting, whatever it was, but I enjoy Elon Musk. I think he is a really interesting person. And he was given a presentation just on how well Tesla has been doing. But the thing that caught my eye is they're moving their headquarters from California to just outside Austin, Texas. And they're going to keep California open, but they're moving to Texas to get a little bit more space, a little bit more freedom in some areas. And I was just intrigued to click on Tesla's website to take a look at what these factories they're building are looking like. And if anybody's taking a risk in building a factory in 2020, 2021, you've got my ears. And so I've just been encouraged to see that business is moving forward. The innovators are still being rewarded. Tesla's Model 3 car, it's their little car, was like the #1 luxury car in the world last year as far as sales go. And so it's just cool to see. It's cool to see that innovation is still happening and that people are doing things differently. Like Tesla's new factory that they're building, they're dreaming of putting solar panels across the top of that thing. I mean, it's just cool. It's just creative stuff. I like to see that.
And as a compliance person at Gimbal Financial, I'll point out that this is not a recommendation for any individual security. You should talk to your financial advisor before you choose to make any investments. Yeah,
absolutely. This is just about what is happening, what is really cool out there, and change and innovation. That's always good.
I think, there is not really here on the planet Earth a perfect financial system. History has taught us that socialism doesn't work well. And yet our culture is wanting to retest that. A very basic principle within the capitalistic thought is that capital moves to where it's treated the best. And so if you are observing these sorts of behaviors and you see that a factory moves from California to Texas, you might want to look at what's going on with the regulatory environment, the tax structures and things like that. And Texas seems to be a place that treats the capital more reasonably to those people that own it. So Austin probably is from my observation, is a small sliver of California, but with a nicer tax structure. So I've noticed a lot of those sort of things going on. A lot of corporations that are based up in the Northeast are moving to other places, but Texas seems to be a beneficiary of some of the mistreatment of capital in other places in the country.
Well, a few years ago in Austin, they had a South by Southwest conference. I think they still do it, but its infancy was really the catalyst to start to bring a lot of creative minds together. It started in the arts and design, but that oftentimes leads the way towards just creating a great culture for overall life, business, families, just enjoying overall life. And so, yeah, kudos to Austin, kudos to Texas for winning the landing spot for a big company.
So we've been keeping you all up to date on what's going on with the underlying direction of the markets. Our software shows that there's about 9,128 stocks that is in our database, and that's not all the stocks. That's just one particular database we subscribe to has. One of the research people that we respect a lot, Mark Minervini, his data, I think his database must wean out exchange traded funds from that particular database, because his data is coming up a lot differently on a regular basis than what I'm seeing. And on his analysis, only 37% of the stocks are trading, at least as of the weekend, we're trading above their 200-day moving average. But when we started talking about this a few weeks ago, there were 8,950 stocks in our database. We're up to over 9,128. That's just showing that there's new things coming to the market as the stock prices are higher. And then we've talked about there's a 21-day moving average. It just tells you the last 21 days average price of stocks, 50 days, last 50 days average price of the stock, and then 200. And those give you an indication of what direction the markets are going in the short, mid, and longer term. And so with only 37% of Minervini's being above the 200-day moving average, that tells you that in his database, about 63% of the companies are trading below their 200-day moving average, which is essentially the last 3 quarters of a year, those stocks are trending downward. And that gives you an undertow that the market isn't overall that healthy, even though some of the indices will be hitting new highs. On our numbers, we show about half the stocks are below their 21-day moving average, more than half below their 50-day, and about 40% of them are below the 200-day. So our data is a little different than Minervini's, and I'm guessing that's why, is because the exchange traded funds skew that data. But I thought
I was going to say, along with that line of thinking, yesterday was a really great day in the stock market as far as, price accumulation. Things look pretty good. But we really, we're still kind of in uncharted waters. We didn't break through our 21-day average or our 50-day, kind of went up right next to it and then backed off. And so we're at a spot right now where if you're overly optimistic, I know there's this buy on the dip mentality that's been happening for years now, but unless we push through that 50 or the 21, there could be a lot of companies who reverse the other way if we go south. And so I think today's going to be a real pivotal day. I can't wait to see how the day shakes out, and then that might lead into some homework over the weekend.
And right before we got on here, you had mentioned that the volume is
because of that. Let me show you some of the things that are going on the markets. We took a more conservative approach in accounts in the last week or so. Just kind of, we can, because there's in our advisory accounts, there's no trading charges. We can get in the market without any costs associated with that, trading costs. And so let me go to the Nasdaq.
Historical data.
This is all historical data here. I'm going to go back just to yesterday, just to make sure you don't get confused that I'm making predictions here. So
not guaranteed.
There's no guarantees. Yeah, we're let me see if I can do this.
And as Keith's doing this, we really look at a few different indices. We look at the Nasdaq, which the majority of stock, 3,500 stocks or so. We look at the S&P 500 stocks, and then the Dow is just 30 stocks. And so, the Dow's looked pretty decent in price and volume last couple of days, but it's just 30 stocks. So if we can go out to the Nasdaq, get to capture a lot more of what's happening inside individual stocks.
So as mentioned to you, the idea that these companies are trading the darn it. This red line right here is it's not cooperating. Let me get right back over here, folks. This red line right here is I
don't know.
I don't know what just did it. But anyway, let me refresh this for you and I'll start over. Sorry about that, folks. You get to watch the lack of skills here. This red line right here, that is the 50-day moving average. And you can see right over here when the market was moving in a healthy manner over here, it stayed well above that 50-day moving average. The green line here is the 21-day moving average, which we mentioned to you. And this black line is the 200-day moving average. And so we came below this 50-day moving average right here on higher volume. That tells you that the people voting with actual money, there's more sellers than buyers, is what that says to you. And then after that happened, right over here, you see the acceleration of more volume coming on the sell side where these people are selling into it. And what we'd like to see is when we have these up days, we'd like to see this volume over here pick up like it did over here. When you see the market accelerating upward, you'll see more money coming into it. And so these rallies we've had the last couple of days or so, they've just come in with lower volume. And that's true with the Nasdaq. If we go over to the S&P 500, you see a little higher volume coming in over on the S&P 500 stocks. And then the one area that's, excuse me, it's been holding up pretty strong is the S&P 600. Excuse me. And you can see that it hasn't really done anything since about March. It's just been trading sideways, and these are the smaller companies. So what happened with that, with the S&P 600 smaller companies, or what you might see also in the Russell 2000, is this 200-day average has moved up to where the stocks are, rather than when I show you the S&P 500, where those stocks are, they've moved kind of up along with it and had quite a gap between that. So we've taken a more cautious attitude, is really this essence of showing you these. Maybe I'll show you one other thing that's been going on that's really interesting is if we go to the actual industry groups that are showing strength, our software shows you 197 industry groups. And so when I click on the chart of the industry group, one of the top ones is coal. That is not generally a strong economy when the top industry is coal. It may be good for the industrial side if they're still allowed to burn coal. Then you see some consumer lending, oil and gas, a little bit of transportation. But as I looked through these earlier today, the leading industries, they tended to be energy, those small companies I just showed you, and what is this one? The small community banks have been doing well, and that's not a recommendation that's on the screen there. I'll go over here and stop sharing that. But the banking has really shown strength. A lot of the companies that led this S&P upward, they're just really struggling right now.
Yeah, I did a search. Value Line has just a really great exchange traded funds search tool, and you can rank them according to their rankings. And just like your discovery, Keith, it seemed like the first, I don't know, 30 of the top 100 were all energy related, all some type of commodity based index. And who would have thought, right? Who would have thought that would be the number one leader in October 2021? We tend to like to see other industry groups up there over the commodities. The commodities can just be so volatile. and on a dime they can turn. And when we say commodities, that that would also include things like gold and silver, which haven't been doing that well. It's the commodities that are all energy based, and so it's been pretty interesting. Mind if I switch gears to a personal finance, or
let's go there?
You wanted to look at?
No, we can.
Next time we'll check out the VIX and see where it is. That's something we talk about from time to time. But switching gears to a personal finance. When I was at this leadership conference last weekend, I found it interesting that one of the common conversations was, how are the personal finances doing? And the personal finances, I mean, that's why everybody's working. Everybody's working for their own personal finances. And so one of the things that came up, it was great for a financial guy like me to be able to be there, because I felt like these guys were financial advisors to me, and they were preaching from the choir. It was absolutely wonderful. We were talking about things like a net worth statement. When was the last time you updated your personal net worth statement? That might be something Keith or I ask for every now and then, or if you're filling out a new account, or if you're trying to borrow some money, you might have to fill out a net worth statement, what you own and what you owe. But the question that really got everybody could pretty much fill out their net worth statement within, like hand grenade approach, like to the next or nearest 1,000. But the one that got everybody was, what are your expenses for the year? How much money are you spending? And there were a few people who really had this dialed in, but the majority had no clue. And so there are some of you out there who are just naturally gifted accountants. You just, where every dime is being spent. You take pleasure and joy in having your spreadsheet up to date.
We see you out there. We know who you are.
You can't wait to talk to your wife or husband about it, and they definitely can wait to talk with you. But it was really encouraging to me to say, hey, where are your expenses for this year? And I heard folks who were doing really well financially say, you know what? I don't know. I've loosened up on that. I've heard other folks who say, I've made it a point to really tighten that up. There's a ton of great digital tools out there for you if you want to use some of these that came up in conversation. There's Mint. There's Every Dollar by Dave Ramsey. There's You Need a Budget. And so this week I got on all three and signed up for all three. And I wanted to find out which one is the easiest one to work with. So I fired 2 already. But you might take a look at that if you're thinking, well, Doug, I have no idea what my expenses are. Maybe you try out one of these, or you just go to a white piece of paper and you figure out, hey, what are these things? It's just data. And when you know the data, the whole opportunity or potential problem really starts to diminish itself, because you just have data to look at. And it's about the future. It's not about your past. It's about what's in front of you. And so if you can know where you are on a personal finance basis, then you can get ahead. You can start planning for the future. You can get ahead on the thing that's really important to you. And my guess is that's why we're working anyway. That's why we're doing what we do. And so anyway, that's my goal. Check out some of those personal finance trackers or the old sheet of paper. Let us know which one you like, or if you need help in that area. I'd be happy to share my experiences on the 3 that I looked at and the 2 that I fired.
I don't use a budget, so I won't be calling you on those. The way I do that is completely different than the traditional thought. Is I balance my checkbook and review my credit card statements, and that is looking in the rear view mirror versus the windshield. But for our personalities, for Connie and mine, we tend to be savers, and it's harder for us to actually spend money than to save it. So it really depends. So if you happen to be more like me, that you're more anal about keeping it than spending it. I can kind of talk you through those strategies of how I've kind of loosened up the purse strings and learned to spend more money, because there's just different personalities, how these things work. And I even find it ironic that really, I don't think anybody really balances their checkbook anymore. I think that's
does anyone have a checkbook anymore?
Well, you have a checking account. So yeah. I'm not throwing anybody under the bus, but a number of years ago in that process, I discovered a $100 green pepper made it through the filter, and we were able to return that back to where it came from and get our $100 back. But the cashier rang it up incorrectly. I love that one. So yeah, I think watching your cash flow, I had a wonderful conversation with a widow this week who was concerned that she might be spending too much money. And the fact of the matter that financial advisors, none of us can tell you that you're going to have enough money. Yeah. and people that will tell you that, they're not being honest with history and things. And so what you can do is you can manage your resources today wisely. And so what I was able to tell this widow is that, there's two ends. You can have silos where you stockpile money up and then you end with too much, or you could be the person that gives it all away. And my guess is a generous heart is going to end up with you being in a better financial place than having a bunch of silos that go to next generations or multiple generations. So there's just a tightrope on how to manage your cash flow.
Yeah.
How do you do it, Amanda?
I do it the way you do it.
Okay.
Except I use a spreadsheet, not checkbook.
we need you got a spread. You're more systematized.
It's just the 2021 way of Amanda doing it versus Keith's checkbook. That's it. But it does the same thing.
The last century. So, we'll have to ask Eric. I'm going to guess Eric has, his personality suggests to me that he's got something pretty tightened up there that is maybe good advice as well. What do you guys think?
I would agree. I just want to make a quick shout out to everyone who joined us this week in Crawfordsville. I had just the best time meeting with a bunch of you. That gave me life. I put a lot of faces with a lot of names that I've been working with over the last 5 years, but that I maybe never have laid eyes on. So thank you all. It was such a pleasure.
That was a lot of fun.
Yeah.
It was a good time. I think I'd throw out one other financial planning idea while we're here before we run out of time, is that our database enables us to track a lot of information, and we keep that extremely private, and it's secure with a variety of passwords and things. But one of the things that would make our role in your lives easier is if you would introduce us to your family members, not for the sake of business, but for having conversations with them in case things shift in health and other circumstances. So we have the avenue available to help you in times where you may not be able to help yourself. But along with that, we need copies of power of attorney documents and those things, so that if there is a challenge, that instead of your family having to react to those situations, we can proactively have those conversations. And it doesn't matter whether that's people that are older than you or younger than you, because those scenarios happen no matter what age, that there's some disruptions to your lifestyle. And so we just want to make sure that we're here to help you the best way we can and be cheerleaders of you doing what Doug said earlier, is enjoying today. Same thing Eric said, is enjoying today and making the most out of it.
It's a great note to end on, in my opinion.
Yep. Doug, anything we need to know?
Get outside. There are some great places to go. Even if you live in Indiana, there's some great places where you can go and enjoy the fall. So I want to encourage everybody, wherever you live around the country, get outside this weekend.
We hope to see you next week, Doug. I'm holding on to this chair for the last time.
You guys have a great weekend. We'll see you next time.